Welcome to TradeTheNBI.com. This is John. This report is for January the 7th. New Year's already moving by quickly. So, interesting setup here. We ended up with the red dot short here from the INX standpoint, not supported by the future, so we weren't ready to jump on short setup yet. And, we're still trying to reconcile the divergence between the two futures as well as the cash index so that we can make sure that we're all on the same pathway. And it's interesting because we've got positive extremes here. This one moves to a negative extreme, which kind of helps alleviate some of the overbought. Typically, lower positive extreme on a higher close, that's a negative. And when you look at the expanded ratio histogram down here, we have our yellow line below, so this should resolve a little bit to the lower side, at least towards that target. But we look at our power momentum here, and that blue maintaining itself above the yellow lines indicates that we're still flush with buyers, so you don't have that dip. Now, from a shakeout indicator, we were at 10.4, now 10.8, so it's still rising. So we don't have a drop off in the shakeout just yet. Now, the fact that we've had the yellow line cross back above here, this is the beginning of where you begin to look for short setup. A lot of people want to start too early with their short setups, and more often than not, you want to see this yellow line pass up here and then have your histogram, the white line, dip back below it. And so that's a good one to note. Like, well, right about here is when it happened. Now, that happens sometimes a little bit later. That was right about here in this particular case. We would have expected to see the exact same kind of configuration right here. No, didn't happen. So, worth noting. Now, looking at our up-down power, gets to be a little bit different story. We're starting to get up into the mid-60 range again. So, we'll see. We're close, but I'm not going to jump into anything just yet. So, 1465, we just got above this, well, perceived resistance. Not a whole lot there to really go off of. So nothing too special with that. Now we do get a gray dot. And we can scroll back through, and those of you with the indicators, always welcome to do that. But now if we look at SPY, let's take a look at what the ratio is here. The easy way to do it would be to take the red number, 236, and divide it by the white number, which is 360, and you're going to get about 65%. So very close. But now you're seeing a series of short setups building in here. They're either going to start moving this thing lower pretty quick, or they're going to get rolled over, in which case you're going to see a significant bounce. Trying to think of where we've got other gray dots right back here. Most of them are looking just for that low to be retested. So nothing too dramatic yet, but always nice when we see this buildup of them. It's your first letdown is where we would expect to see our first decline coming into the overall setup here. And let me check real quick on this program. That's the NBI Opus stocks. So that's still moving across there. Here we have our price oscillator combined with our MACD. Now we knew we had MACD buyers that were going to keep price elevated as they came in, and we would expect to start seeing some selling going into those. You can see the momentum's dropped off. You're up in the mid 85 range. It's not horrible. No real drop off from it yet. We still had the computer projection up near 1470, so it's still a ways above. The high here was 67, so a little more room to that setup there, and nothing to complain about really on that. So from our standpoint, let's go ahead and take a look at what we have for our SSO, because I went through and I started to adjust our overall setups, because at this particular point what we had to do is I had to convert the close of the year and then put that as our new price, because we ended up closing out the year for our overall profits for last year, and so we have to adjust the cost basis to that, even though it was lower than we originally got in. That has to be attributed to last year's. So now we want to have our stop all the way up at 62.75 within this setup, and I think it's actually attractive to start looking at a call setup from here. And so I was looking at the 63s for $1.20. So I would like to create that. If you don't want to do it, then I would suggest you move your stop even higher than where it is here, because when this does do a decline, it's going to be a swift one, and we know that you're looking at, well, at least taking out the lows back down here at 62.14. So by selling through 63 call, we're collecting the premium, still keeping ourselves in the position just in case, because maybe we end up somewhere in the middle of the 62 and have another buy signal set up. So that's the reasoning behind that overall. USO, still it retraced the positive extreme. Nothing special with that. No new short setup signal, but you can see that it's getting a little up there. If we got a little bit more of it, then it actually for us it will be we're going to buy a put, and we'll create a reverse hedge to start with. And let me tell you how reluctant I am on that, because this is how we started out last year, where we got overdone and we were looking for a significant pullback before we got back in, and we just had that railroad where it just kept going, and it stunned us. But you have to block out what happened last year and start fresh. It's a new year, new setups. So gold, I mentioned this was going to be attractive because now you've reached your not quite what I would call oversold, but attractive bullish setup, matching lows, higher shakeout. Gosh, an improvement in the shakeout here, and this thing is set to take off. And I know, it was funny, we were doing a live event, and some people were saying that CNBC or whatever was negative on materials and things like that. And it's like, well, that's fine. Let them be. We knew what we were doing with it. We could see that CLF had gotten a little extreme, even right about in here, and we went ahead and sold the call on it. Let's go ahead and put our CLF up. So we sold 37 calls and got 60 cents, so we were effectively out at 37.60. At one point we almost reached a point where we were inside of 37 and would have kept the shares. But they got called away, that's fine, and no, we don't get anything for that because that was off of last year's. So, sorry. Nothing you can do about that. But it was pretty decent overall. I mean, it was a nice setup, nice run. We'll begin it again. Again, I don't want to get in too early, so we'll look for a little bit move down here before we talk about attacking that to the upside. From our X standpoint, same situation. We're cleared now from there, so we adjust our cost basis to the end of year last year, so it brings it up. Again, we were down to like $13. We're back up to $23.85 with our 200 shares, so that's fine with that setup. And I want to look to sell 26 calls. They're going for about 38 cents for next week, right in this area, because we've got gray dot. We know we're looking for just a little bit, at least, to retrace back down to the lows right there, the 24.85 range. So selling the 26s are slightly ahead of this. If there's any little push, you can see here we're matching our move up, a little bit lower shakeout reading. Nothing wrong with being a little defensive, collect some premium on it, reposition ourselves, get used to making some trades into the new year, and go from there. WLT, likewise, what we did was we had sold a portion of our WLT at the 37 strike, and that was fine. So what we wanted to look at was 37.50s for $1.15 range going into this current week, and that's perfect because it gives us a nice little bounce into price here and gives us a little room for a retrace down to this gray dot 36.12 without being completely out of it. And we just utilized an effective strategy to just kind of, not be overly aggressive in a short standpoint, because we're seeing a lot of overbought and a lot of short signals, but really the market continues to maintain a pretty resilient setup overall. And while it should resolve to the downside, we know we just changed from red to green trend, and yes, we were with the yellow below on our expanded ratio histogram, which means we should get a pullback from the overall setup. But you can see we're easing overbought in futures already, so that corresponds to what I'm seeing here from our MBI Opus. And so again, MBI Opus puts in another buy signal. So If we slide this one over, we had our NBI Opus buy here at 1453 from a future standpoint, and then 1457. Now, normally when we flip over here, I'm usually looking for a couple of days of retrace before, and then we could have then took a nice long position to ride up for our futures. But still want to see just a fractional pullback. We've had the yellow above on our Empower Motor from a futures, which means we should be getting a little bit of selling. So this is very unusual to see that, but doesn't mean we can't take advantage of it. No reason to shy away from it. So any weakness, I will have us loading up into our futures when you have these kind of buy setups. So that's all we can do, is just take what the signals are giving us. And in this particular case, it's a little bit back and forth. Do want to point out that at any time you can check out our YouTube channel, because I do put those live events back on there, or you can go to thelivestream.com and watch any of those. Always a good example, because we go over a lot of the intricacies of the indicators, so it's good education even if you missed it, and particularly those who are trying out the indicators, those who have the indicators. I always recommend that ongoing education. It's worth a while, because you begin to pick up these little nuances, and you don't overreact to a situation because you can see it developing right in front of you. And you know what I think I'll actually do? I'll probably this weekend create a study, and we can determine how many times when we are at a peak like this with our shakeout in this particular area with the yellow below, and see what our percentage returns are, because we can get into that kind of minutia vis-a-vis the indicator. And while this overall setup was bullish coming down here, the fact that we're now about to move back up, you should start to see a little bit of a pullback in the overall setup. And so as weird as it was, I was really thinking about more of a short setup within this. But then when I come and take a look at what the program's doing, it's like, okay, you have to step back, and it's like, fine. What are the statistics for this particular setup? So that's easy enough, because we can go back to NBI strategies, click the setups, and this one happens to be the GAM. And so if we take a look at that, we'll open it right here, right in front of everybody. Pretty hard to argue with the 90% win rate. So do I want to be fighting that? Probably not. So if we get any pullback to at or below where our initial signal was, we'll probably start to jump on that. We were a little bit cautious, just having changed from red to green trend, but as that builds up, it should be a pretty good opportunity to take. And if shorts can't pick up the pace here and drive it lower, this is going to be fuel for buying. So take that into account. If shorts can't force it lower, then they haven't been able to overwhelm the number of buyers and people who still want to get into this market despite where it is. And again, from our weekly standpoint, if we looked at our weekly chart, we still have that 74 up target here for the other orange dot. Now it's many weeks away from there, and I put a little less emphasis on that one, more on this 1454 that we finally reached, because these were much more directly related. But you can also see we are getting to an overbought setup within here. -6 in the differential from a weekly standpoint. We just ended, and so it'll be interesting to see where next week starts, because we could be either at a positive extreme, which would mean that we're just going to be biding time before we get some significant kind of pullback, and we just don't want to get caught with any of those kind of setups. So we'll do what we always do: be cautious, but yet look for opportunities to take advantage of good setups. As always, though, continue to look for me on StockTwits Twitter. Those of you who want to play with the dot alerts, we've made some adjustments for those that allow one less time frame than 30 minutes, so that you get a little bit more clarity between your 15 and 78-minute charts, and then also discounted a little bit so that you can get all of the various 15-plus stocks for a little bit less from a weekly standpoint. Take a look at it. Always nice. And keep watching for the live broadcasts. So as always, trade well.